welcome back to yet another episode of Reinventing Finance. As usual, with my lovely co-host, Tom. Tom, how are you today?
I'm very fine when you tell me that I'm your lovely co-host. So.
Okay. So that's, for those listening, I gave the kind of half heart, but it probably needs the visuals. As usual, Tom and I are not all by ourselves. We have Carla with us this fine morning. Good morning, Carla. How are you?
Morning. I'm good. How are you, Nick?
It's very good. Thank you. I mean, I always, love these little guilty pleasures in our kind of virtual abode. But for those of our viewers or listeners, Carla, why don't you briefly introduce yourself? Who are you and what do you do?
Sure. So, morning, everyone. I'm Carla. I don't know if you can guess by my accent yet, but I'm South African by birth. But I'm actually living in Switzerland, in Zurich right now. And what I do professionally, I am the head of investments for Aperture, which I will tell you more about a bit later. And I have been working for them since last year, January. So for just over a year now. And my background is in financial services since I actually started my life as an auditor, which I escaped from, luckily. And yes, now I'm in the venture capital FinTech world, which is very exciting. And personally, I am married to a Swiss, expecting our first baby in July, which is exciting.
Congratulations.
Thank you. And we love the outdoors. We're big golf players. And yes, that's more about me.
Awesome. Let's dig into Aperture. I believe if you check your website, you describe yourselves as growth marketing and growth capital for fintech companies. Care to elaborate?
Sure. Our business model is interesting and unique, I would say. There are not a lot of people that do something similar to us. The business actually started with a sole focus on growth marketing because the founders and who they subsequently hires were marketing experts in fintech. So they helped early stage fintechs go to market, win their first clients with messaging and branding and all of those things. And along with that came, of course, good investment opportunities. So that kind of organically happened on the side where we built a portfolio of startup companies that we also invested in and worked with. And the investment side grew as we had outside interest from investors to also invest alongside us. And that's where I came in last year to set up a separate investment function where we can actually take on external capital. It's sort of in a regulated way. We don't have a FINMA license, but we operate as, we can sell financial services. And so we take on external capital, we syndicate deals in the fintech companies that we work with. So I would say there are kind of three pillars to the business. The first is the growth marketing services, where I can give you an example of that a bit later. And then the middle part is investing on the balance sheet, which would usually be very early VC investments. And then the third pillar is taking on external capital for investments in separate SPVs, and where that's on a deal by deal basis. I hope that makes sense. Happy to elaborate further.
I think it does. I think, growth marketing engine, etc. Can you elaborate? Let's say maybe 1 to 2 examples, and ideally, and I appreciate that you're more on the investment side, but from your experience so far, some kind of counterintuitive insights, because there's a lot written about growth engines and go to market, and take your pick of your predictable revenue type SaaS fintech growth thing, but anything counterintuitive pierces the veil, I find.
Yes, so I would say that what's different about what we do is that we provide a plug and play marketing team from the get-go, where you will have access to a fractional person within a marketing team, from a graphic designer to content writers, product marketing, but a fractional person. So the entire spectrum of everyone that you would need within marketing that works and embeds into your team. So we joined your Slack, well, not me specifically, but whoever, the people that work with the clients, join the Slack channels, get an email address within the company, and they really work hands-on. Sometimes runs a CRM, sets up CRM, prepares sales pitches, does precision marketing for certain deals or big deals that they want to win. So it's obviously dependent on the client and what their specific needs are and the stage of their business, but you kind of have access to the whole fleet of marketing professionals, but for a fixed monthly fee, instead of having to hire all of these people and trying to manage them in-house.
Understood. It sounds, I mean, these things are always unique in their own regard because of the people, but it sounds similar to some of the things that I've experienced, like FinLeap in that was still active, where you kind of company building, and you do get fractional marketing, recruitment in that for that regard, or even tech teams, so you can kind of get started, as there's obviously lots and lots of things to piece together, especially in the early stage. Did you find, from what you've overheard, some counterintuitive advice on what that is, what you provide, where people kind of go, that's unusual, that's not what your normal LinkedIn stream would provide if you're following XYZ? And maybe there isn't, maybe these gurus are right, and maybe you just it's one of those things, you want to get fit, put in the work, that's it. Maybe and maybe that's something that people need to hear. I don't know.
So I think what we have seen is with the early stage companies is that for them to know which position to hire into marketing, they know that they need to improve their marketing function, and they know, but do they get a CMO which doesn't really get their hands dirty with maybe the content writing, or even the LinkedIn posts, or that kind of thing, or that they're not completely sure where they're missing what and what's the most important to do right now. So what we provide in that sense is, from the start, we can literally do all the groundwork, but then also, as you grow, transition into an in-house marketing team. Once you raise your Series A, Series B, the plan is always for us to actually, hand this over to an in-house marketing team eventually, but just help you out at the start with the experts that we have.
Understood. And to be fair, I think it sounds, and some things you just need to hear over and over again, but it was, I think on my LinkedIn thing, someone said, my head of growth is not delivering after a year. He or she tried everything, should I fire them? And then the question was kind of like, have you met product market fit? But what it also means, it's just when you don't really know some decisions, and you don't, right? Is it the person? Is it the product? I mean, who really knows product market fit? People think they have product market fit, right? But I get the point of it being a more balanced approach, because you don't really know when the slide shifts. And so you can then at least appreciate that it's very, very unlikely the people that you've hired, and it's more the product or the market, which I think would alleviate a lot of uncertainty in the early days. Are you public about some of your portfolio companies that you've helped, or is this a well-kept secret?
No, so we actually have, I can talk about the ones that are on our website. So one of our clients is Matako, and they are a digital asset custodian infrastructure provider based in Switzerland, in Lausanne. So they've closed many big banks as clients, and I would say that's one of, probably one of the clients that we are the proudest of on the marketing side and what we've helped them achieve. But then on the, so this is because selling B2B and selling to banks is something completely different, right? The sales cycles are super long. The RFP and the competition is very, very tight. So you really have to know what you're doing, and we really are able to help out on that. And then on the another example is sometimes, so with Matako we got involved a little bit later, just before they raised Series A. But with some of our other clients called Direct Genome, they were working on making regulatory content machine readable, and that's a Cambridge University spin-off. With them we actually got involved before they even incorporated the company, and our team, this was actually before I joined, but our team was interim executives in the company, and we won them their first clients. We worked on their pitch decks to help them close funding. So there we were really hands-on. We also invested, and we got quite a decent stake in the business, but then we transitioned out, and now we're just follow on our investments, and we're not as hands-on involved anymore.
Understood. I guess, but if I understand this correctly, you work with startups, not with corporates.
Yes, so we do some work with corporates in a, I would say, once-off project. We can look at an embedded finance strategy for them, or doing some at events, hosting maybe a talk on embedded finance, but that's not our core business now.
Because I was thinking that more and more, and it takes a while, there is, let's say, different businesses, different product lines that corporates spin up. There are corporate CVCs that might have see their portfolios struggle a little bit, but not really know what to do. And so I would have thought, just out of interest, I certainly would know a few people, I think, that who you might be able to help. Whereby either helping some of their portfolio companies, but also advising them on how to launch new products and new businesses, if you like, because this whole thing, be that embedded insurance or beyond insurance or ecosystems, it feels like something that there is a corporate demand for outside of their core business, obviously.
So it's actually one of our clients. So we do take clients on where we don't invest. I have to say we prefer working with someone and investing in them, so that we can also share in the upside that we create, so that we can also have the exponential growth side instead of just being a services business, right? But we actually do have two clients where they are like spin-offs from banks. One is a BaaS provider, and the other one is also like a digital asset in that space. So we actually do this, but usually then it comes not from the corporate, not from the incumbent, but rather from the portfolio, from the startup themselves, that they need the help. So yes, it is definitely something that we do.
Okay. No, I was just curious, because these lines are blurry these days, right? Not every corporate is just corporate, and not every startup is just a startup. And it feels like, especially some of the growth functions, obviously, it's different to do marketing for, I don't know, UBS or Mobiliar or Allianz, or SAP. It's very different than when you need to, hustle and, figure out whether this can be product-led growth or pay. Okay. It's just different. And so their learnings might actually be misapplied to some of their portfolio companies. So I don't know whether that would be, running big marketing budgets for a established, potentially known financial services brand, not sure whether that is the right skill set for a Series A that might get into a growth slug.
Yeah,
loaded statement, but yeah.
Yeah, no, I mean, we do prefer to get like involved super early and also take a stake in the business.
Yep.
So that we have skin in the game. But there are scenarios where we will take on a little bit more. I mean, once they've spun out of a corporate, get involved there. We also do that.
Awesome. Let's maybe shift gears and kind of talk about the market. I think one of the really interesting viewpoints of people, working within the VC space is obviously, deal flow and some flickering lights of commercializable, solutions to certain problems. And you can decide whether you want to focus more on FinTech or InsurTech, whether for you that's a significant differentiation. But which key trends do you currently see? And if you were friends with a executive or corporate CEO, you would go, you know what, guys? I don't know whether your people are telling you this, but you should really get in on this one or these three things, because it's a high likelihood of them really transforming, the business.
So I mean, for me, that definitely is, not to use a word that's overused, but embedded finance or embedded insurance, perhaps in to make it more specific to InsurTech. I think that it's unbelievable. To me, it's unbelievable how slow the incumbents have been actually to react to this, and thinking that embedded insurance is just digitizing insurance products, because it's not. I mean, this is serving consumers and businesses through channels where they live their daily lives and where you can collect data on them, provide products that's relevant to them, and also even assess their risk profiles based on the data that these platforms collect. So for me, I think embedded insurance is definitely a big opportunity in the InsurTech space. And I did a project for, this is before I started working at Aperture. I actually did a project for a big insurance company on a market entry strategy into North Africa. And we came out of
as you would,
Yeah, well, it's in Egypt, specifically Egypt and Morocco. And we came out of the project. We worked with one of the big, one of the MBB consulting companies on this, and we suggested 100% that they should be looking at partnering with one of the local platforms and starting to provide embedded insurance. At the time, the word wasn't even like there yet. We weren't sure if we should call it infinity insurance or embedded insurance. And we pitched this to them and they had no idea. And it's not even that long ago. It was in 2021. So it's not that long ago. So they still haven't done anything, by the way, in that space. And
why do you think that is? What do you think? Because if I'm talking to executives in the insurance space, right? And, they'll get their fair share of, MBB pitch, McKinsey, Bain, BCG, for those who are not nerding around in consulting, MBB pitches, or, your consultant of choice. And I don't think there is any board member who hasn't heard about embedded insurance, ecosystem, or beyond insurance, right? Or finance. I think they've all heard these things. They probably also heard, you should look at Ping An. Look what the Chinese are doing. It's crazy. Or, so they hear these things and then they kind of look, okay, but I'm still producing, let's take Switzerland. So I'm still producing all the business from my tied agents. Okay, yeah, we have a big partnership and, it works so and so, and it's good. So we're on it. We're also transforming our IT landscape. My CTO tells me that in 3 years, we got all the tools we need and, then it's happy running and we'll, So what do you feel? Again, let's hypothesize you're a good friend of said person, and you'll say, yeah, I've heard this before. And you say, listen, but you're missing, what are they missing? What do you think? Where do you say, do this? Is there any actionable advice? Because I do feel there's a difference between, yeah, I think we're on it, or we'll get on it when the opportunity presents itself. If Amazon comes knocking and we get a highly profitable line of business, my guys will be on it. Otherwise, nah,
Yes, well, I mean, if they're not going to do it, someone else is. So if you're not going to get the product to where the consumer is, then someone is going to fill that gap, first of all. But I think the problem is two-sided in the sense of its brand side. So with brand, I mean business or consumer-facing platform. I call it a platform, but it could, it doesn't have to be only a platform. Yes, so we're not all of them are aware of the opportunity yet, or that, when I spoke to, for example, a luxury goods company, why are you not offering embedded, why are you not offering insurance at point of sale? Because that's not even like really embedded, in my opinion. That's just, giving your customers what they want. No, because, insurance is such a complex industry, and we don't have the licensing and that kind of thing, and no one else is doing it. That's the response. So then on the insurance side, for them, it's no, but we're putting so much money into our tech, and we are digitizing our products. But that's also not, you're not changing the distribution channel. So it's still me going on to Zurich Insurance. Well, I can't even do it on their website in Switzerland. Switzerland is very old school. Tom, I guess you would also agree there. I go through a broker and then ask them, can I get a valuable goods insurance policy through you? And then I have to send invoices of all of the goods I want to cover. And I just wish I can get cover in the store when I buy the watch or the piece of jewelry. Yeah, I guess so, that answers the question.
So do you think it's ultimately, what is it? Is it a lack of imagination? Is it a lack of governance to say you need to focus some of your attention on revenue streams that are not big enough for your business to move the needle yet, because otherwise you'll never will? I think there was I need to get this. I think there was a study by probably our friends from McKinsey who looked at high growth companies, and I think that was something around 30% of the total revenue were done by products not even invented 2 years ago, or something to that sort. Yeah. Right now, it's probably technology companies, etc. But what is it? Is it both? I'm just trying to wrap my head around, because I do feel there is a very different reality, right? Because my day is not the day of a CEO of an incumbent insurance company with lots and lots of things and lots of business, and there's so much things you do, and then you kind of go, wow, this is great. And to be fair, you don't even need to invest that much anymore. There's services, partnership, there's various ways to go to market, all with their advantages and disadvantages, but it's not, we don't have the money or something. You need to invest some, but I'm just trying to wrap my head around, because am I the fool here? Because I do see that as well, but they just so slow.
So I think, I guess it's a good point. Obviously, there's so much going on, and where should you be focusing your attention, especially right now? There are really a lot of things going on, right? Because there's a recession coming. Should we, or inflation, so much about recession, inflation? Should we really focus our attention on introducing a new line of business, or with a lot of complexities in their minds? In their minds, is way too complex. Maybe they don't see the revenue potential as clearly as we do, and they, I guess it's complexity, and maybe the lack of revenue, and also maybe not being very clear on actually how much this is going to create stickiness with customers, or the value proposition for customers they're not so super aware of.
I'm a little bit skeptical. We have seen in the FinTech or InsurTech space such an enormous amount of spreadsheets with enormous growth numbers. And if you just, let's say, see what is the result of that, let's say just take this example of, let's say, insuring something in the shop. Okay, I was raised as a financial advisor. From a risk point of view, it makes more sense to take care of the customer and to take care of all the belongings somebody has. So just take a classical insurance company. I think in the past it was a kind of fear of missing out, and then somebody started with a very nice app, and those CEOs of those incumbents were incredibly impressed by those smart apps. And then you could, I don't know, get an insurance if you would buy sunglasses, or if you would take this kind of e-scooters, etc. But if you just see the numbers 5 or 10 years later, and you compare this with these old incumbents, and our last talk was with Dom Kura, a company in Germany nobody ever has heard about, and if you just see what kind of revenue they make, then I actually think this new phase will now go into it will be a kind of reflection on the real numbers. And I think these incumbents will come back. And if I would just take in Switzerland Mobiliar, which is seen as very old-fashioned, with those agents, etc., I actually think the incumbents will much more come back to do gradually, or let's say gradual steps, and make their own processes better, and listen to their clients, instead of put loads of money in all those insurtechs or fintechs, because, let's say, from a numbers perspective, I don't see not a lot, let's say, business cases which went well. Which doesn't mean that, let's say, from an investing point of view, if you float, let's say, a company or you do an IPO, that can, from a financial point of view, a very successful thing, but it doesn't mean that the real numbers are, let's say, on a long-term perspective, create value. So I mean, and what are these? I mean, also if you take Lemonade, for instance, I mean, they were very smart on timing their IPOs, etc. But if you just see the amount of much money which was invested, and if you just see the amount of customers, then you end up with a lot of companies you have never heard of.
You know, Tom, I think based on everyone's inherent bias, I think you can pick both, right? I can name you a bunch of companies who today have not even earned back their investment money, right? And valuation. There's a couple, and you know, we can talk about hype and, you know, the boon of, or the bane of, you know, money that might be too cheap. But I think sometimes in insurance, it's just kind of taking a step back and saying, have these things been validated? And if your assessment were to correct, there shouldn't be an Allianz Partners. There shouldn't be an AXA Partners. There shouldn't even be a Cardif. There shouldn't be a Soc Gen Insurance. You know, there shouldn't be a Europe Assistance. So there have been massive companies that have been specifically, there shouldn't be, you know, even, it's in a way, it's Allianz makes a joint venture with ADAC to create an own insurance company, right? So, and these are very traditional models. You say there is a big partner, they have different touch points, so we need to create different products, because some of these things have been validated. Travel, mobility, commerce have been validated to drive a certain level of volume. Now the question is, what is if you can kind of put this on hyperdrive and not have to make a 20-year exclusive partnership to win over Commerzbank? What if you could literally just serve an API and kind of get into the fray better and create uplift? Plus, and there's a second thing we've heard that I agree, it needs to somehow connect. ideally, you do the holy grail is not plugging in the warranty insurance at Amazon. That's gonna become really uncool really quickly if that is your only way, because you're probably gonna get negative margins because someone else is just gonna come in and say, I've won Amazon. Happened with MediaMarkt, and people were just losing money. But what if that is a active component of a flat rate product, of a holistic multi-line product, at a point where that could trigger an advice by someone? If that bridge is to be made, and I think that is what a lot of these embedded solutions are need to provide, and the successful ones already do. So you take that almost as a lead to an advice. That's what AXA does with BMW, right? So they had you get a free insurance to drive off.
Yeah, but that's not the point I wanted to make. I think I totally agree. Let's say if you talk about those corporations, if you take, let's say, ADAC, and you take Allianz, I mean, and that also has been, let's say, before we even have invented the word insurtech. But if you ask, and that's why also a little bit provoking way of putting it. But I think we have been in a phase where you just had an enormous amount of money. Perhaps you'll come back to a kind of realistic scenario, because your question is, okay, what will be the next phase? I think there will be much more focus on enablers. But enabling a kind of current business, and less this idea of somebody starts with an app and is disrupting, let's say, these old incumbents. So I think it will be kind of more realistic approach to gradually more innovation. I mean, like let's say you had this example of, you're totally right, that this kind of websites where, I mean, for instance, in the Netherlands, you always have this electronic signings of contracts, etc. And in Switzerland, you still get this stuff, and you have to put it in the envelope back again. But this idea that you can just disrupt the Allianz with an app, that's something which we were believing, let's say, the last 10 years, and I didn't believe in this, and I think we'll come back to more reality.
I think that so just to get back to the comment earlier, I don't think Lemonade is doing anything extraordinary. They're doing something. They created an app and they're selling digital insurance, but they're not meeting the consumer at the point of where they're buying and where they arrange their travel, or a Uber driver on where he lives his life for 10 hours or 12 hours a day. So they're not meeting the consumer there. So I don't think Lemonade has in my opinion, a very disruptive business model. I think they're just selling insurance in a nice or a new way.
It's a good marketing story.
Yeah, exactly. So, and they also bring this type of, you can give some money to charity if you don't claim and that kind of thing. But where I think it can really make a difference is adding the insurance into the Uber app for the Uber driver. But not only the insurance, you also do his wealth management on there. You can help him with payday loans because you know exactly what his historic earnings were. And you do his auto insurance, his health insurance, or hers, everything within the app for the Uber driver. And they get paid out in there. You can actually run their entire bank account within that app. Whether they want that kind of lack of independence with the provider is another question. But that is, for me, is a complete change. And the underlying provider can still be Allianz. It's just served in a different way. And so, I mean, for me specifically, a good example would be my travel insurance, because I have a policy with, I think it's AXA, and also on my credit card, I have some cover. I'm sure that there's an overlap between what my credit card cover and my travel 100%. Insurance policy covers. But still, there are some things that they won't insure me for. So if I travel and my camera for a certain value gets stolen, it's not covered under my travel policy. And some, pre-existing condition, if I fall sick somewhere and it's related to a pre-existing condition, it won't be covered, for an example. And this is where Booking.com can come in, because I book all of my hotels on Booking.com. If I also had my flights on there, for example, they can look at my profile and say, for the last 5 years, you go to South Africa 3 times a year. You always take a pet with you, which I don't, but if I did, of course, I always book pet-friendly hotels. I always book a family room for 4 people, so they know I'm traveling with my family. And I cancel once every 5 trips, so they know kind of what my risk profile is. And they can give me a policy that's tailored to my profile and my needs. So, and then they can say, do you want to add specific disease cover or malaria cover or something like that to this because you're going to Africa? That is something that, I can't even ask AXA for something like that because they won't be interested. Well, first of all, maybe there's not a lot of money to making that for them, but they don't have the kind of technology to do that either right now. I think it's possible for them to go into that space.
But are these more, let's say, kind of technical enablers? Like we also had, let's say, software in the past, or call center software, etc.
Oh, sorry, what do you mean with that?
Let's say I would the example you mentioned, I would say, are these more kind of technical enablers? So let's B2B providers, like you had, let's say, certain insurance software, etc.
Definitely.
So, but I but also believe much more in this kind of B2B enablers.
Yes.
Than let's say B2C kind of disruptors, because it's not so easy to disrupt Allianz and AXA. So I think, Nick asked, okay, what the kind of direction do those players go to? I think we'll much more focus on that. Probably we'll all agree on that. It's much more about these examples you just mentioned, and then there's a big company which covers the stuff, and it can be AXA or whatsoever, and then you're back to these old examples of, let's say, Volkswagen creating an insurance product with an Allianz, or ADAC with Allianz, etc. But these are the big players who work together, and then they have some small niche software companies who invent something to just make it more smooth.
So Carla, I would like to get your take on, so what else? So what else do you think insurers are missing to follow that embedded space? So what we've had is, they need to see it as an opportunity, right? And then allocate whatever and have some form of internal opportunity cost metric that will allow that for them to do rather than doing something else, right? We've established that probably putting it onto your mainframe or even Guidewire system directly, where it takes 18 months to configure a product and you need minimum volumes of 10 million to configure that product, is probably not the right idea. So you need some form of tech. Let's leave it open whether it's better to rent, buy a company, or make it yourself. What else do you think is missing? Is that it? Is that, a willingness and the right technology? Do you think that will cut the Gordian knot?
Well, it's the right technology, but also really understanding what the consumers and businesses need or want. What are their unfulfilled needs, if I can call it that. But it's difficult in insurance because people don't really always understand what their risks are. And so how do you tell an insurance company, can you cover me for, I can only think of very obvious examples, but if people, like, you don't have financial savvy people in small, like, for example, mom and pop shops are not always run by people that are super financial savvy, and they don't necessarily understand the risks that they're exposed to ask their insurance company for that. So I guess it's also really tailoring products and making insurance more relevant, instead of having like this one size fits all policy that's sold regardless of your risk profile or your needs.
So let me try to paraphrase, because I think ultimately we can agree that the platform needs and their subsequent users, right, are varied significantly. And Booking.com is a totally different beast than Airbnb or probably Opodo, maybe just in the terms of whether they want to, make a shit ton of money or just keep customer stickiness alive. You just don't know.
Yeah.
You also don't know how your product ranks on their opportunity costs. So you don't really know whether even 5 days, 10 days, 2 hours ranks in their opportunity cost of integrating something. And you don't know the lines of products that they think they'll need, their own requirement for product differentiation versus just brand. So would Booking.com be happy to just serve the same product that you're selling on a price comparison website? Or would they say, no, we want something that you can only get at Booking.com? So you also don't know when these people want to talk to you, what their go live. So there's lots and lots of uncertainty that all of it sits outside of your organization. All of it. No project, no smart consultant, no design sprinting brainstorming session is going to align these things nicely. So with that, what you need to invest in is ultimately flexibility and capacity and short decision making, so that you can roll with the punches, because you cannot plan this shit. That would be my advice. It's like, unless you know what's going to happen at which volume, by all means, planning is great. But if you do not know what you almost need to kind of have a pretty generalist approach and go, wow, this is great, I can do that. But to me, what's missing a lot of the times in insurance is, sure, the technology, but quite frankly, you can buy that stuff these days. You'd be, frankly, I think you'd be a moron to build it yourself.
Yeah.
The second thing,
but I actually like this example very much. Let's say the example Carla mentioned. I think it's a very good practical example.
Absolutely.
And especially if you then also are very hands-on, and you can just, let's say, just show with a very small example that it works, because you would get this offer as a client. Say, oh, that's interesting. Somebody really took my data and it had a positive outcome.
Tom, what that means is that is not how insurers plan their projects, right? That is not how, that could be all of some, how do we ingest external data? How do we slice that product? How does that product fit into my FINMA reporting? There's lots and lots of follow-on processes. Insurance is digital, but insurance is also it's a bit more complicated than your average Netflix subscription. I think that what people don't realize.
I really think that will change. So if there is too much money, you have enormous big products. And this whole idea is that let's say in 5 years the world is totally different, and then it's always the same, and you finally find out the world is not totally different, but things have become more smooth, or like, let's say, video conferencing, and sometimes it goes faster because you have COVID, etc. But let's say in a kind of sense of the stuff, the world doesn't change. And you have that from both sides, and I think all those insurtechs, it was always about disrupting the big incumbents, and I think it will much more about working together and see how do we add, let's say, different competencies, or and how can we do small experiments, but it's and then scale. So first unskill before you scale. But it was always skill, and then hopefully in the end it will be profitable at a certain time, because just money was just not, it was just too cheap. And so I think, let's say, the underlying principle of how you do business changes with the availability of money. And it's the same for, let's say, other topics, macroeconomic topics. If there's just too much money around, it's spent like hell.
I don't think there's a disagreement there.
No, but that's why I like this example very much. It would be interesting, let's say, if there is a kind of, do you already see these changes from both sides? So that there is a more humble, cooperative approach.
I mean, I feel like that the tech is being built. As you said, the B2B layer is being built. But there's still this a little bit of delay, or people, both brand and incumbent side are a little bit slow, I think, to jump on it. But it's definitely increasing awareness around this, around the way of selling this, and I'm sure it's going to be there in the next 5 years, hopefully. But
yeah, I mean, it's already there. Depends on how you're looking at it, right? I mean, that's what I mean. If you're taking AXA partners, airlines, so these things, there's, depending on how you want to look at it, you either, it's not there, or it's already there and it's kind of moving. And
it's
ultimately,
happening.
I think it's happening, and I think in a way, what is really interesting, I find, is that your capability investment in, people always talk about, put the customers first. By the way, I think that's bullshit, right? They don't, and the customer doesn't really want to. You cannot really ask the customer. But what insurers have traditionally done reasonably well is, put your distribution partners first, right? So they design products and processes for their agents, brokers, large partnerships. And now I think the more they co-design and co-develop with their partners, it'll make the level of variance, the customization, the tailoring easier to do, right? Because if you go through the process more and more, it becomes, from unscaling to, maybe like a mid mass customization element. And I think there is lessons to be learned, because there might be other distribution partners who want to have some form of differentiation. Why do insurers do product updates with brokers? Not because the customer needs them, but because the broker needs a story to kind of go. And I think in any investment in the agility to respond to your distribution partners, product, service, process, commercial demands, is going to flex a really good muscle, I think. Especially when you see the trends of aggregation of where consumers mingle, you even see aggregation of distribution partners. So I think that embedded insurance, even if you do not believe that selling glasses insurance or even travel insurance at booking.com is what's gonna get you your pension, I believe the additional learnings of responding to your partner's requests ever faster, cheaper, and being able to be a more flexible partner will absolutely work out over the long term. I think it's one of the big things that you'll get a big return on your investment. But I agree, and I think we can all, just throwing money at a problem doesn't make the solution better. I think we can also agree that.
In what you're saying now, do you mean that with your distribution partner will then lead basically your product development?
Absolutely. Whoever and lead, partner, I think it depends a little bit, right? But if your distribution partner has a additional view about what your client wants and needs and etc., and there are the hurdle rates of customizing certain products are there, then absolutely, I think you should co-develop and respond to their needs. And that in itself, I believe, is a great investment in your company, in the way you think about product development, because insurers are very inside out. And in order to become outside in, I think you need to match that with opportunity to match. Because if it's not opportunity, people go, yeah, did we need that? I don't know, short-term insurance to go on a ski lift, or that was outside in, and no one cared because it really actually wasn't outside in. It was just people wanting to play. And that was the only thing that they could came up with in a self-contained design sprinting setting. But yeah, no, I think that's absolutely a key difference. And what that means is that you need to have build the governance muscle to do that. Right.
Yeah, but
and I think that's different than with this
if you're
today.
If you're on the distribution partner side, then you are Booking.com or Airbnb, and you basically own the customer. I mean, you have a lot of bargaining power. So in their interest, they should be creating an environment where they can work with multiple partners and not only one insurance partner. Because if the one is not as flexible as they would want them to be, or they're not as fast, you also want flexibility in who you work with. How is that going to end up?
I could not agree more. And I think there has been one of the disadvantages. I think there were actually a lot of advantages about how venture capital looks on productizing certain things, on, valuing certain things, recurring revenue, one-off. I think there's a lot of learning in there and kind of having that mental frame. But I think especially in embedded insurance, I think it needs to be a mix. You try to productize as much as you can, and what Tom said, you do things that don't scale, and then they scale because the variance is just so big, and someone needs to piece together the solutions. And maybe you have the trust of the customer, but not the right product. You plug that together. Why wouldn't you? And I think that is another mindset shift in embedded insurance to kind of say, not, here are my products, sell them, can tinker them, but here are my products, rather than, if I was an insurer and I tried to win Booking.com, I think my mental frame and the governance to support that would be, if I was now to work at Booking.com and I'd be in charge of auxiliary revenue or insurance revenue, what would I do? And only if the answer is, I go to my current employer and buy all the books off their shelf, is that a good sales pitch? Or it would be, this is really good. I want those 3 products. Those are great. I want to develop these other products with someone. And I'm fine with AXA providing them. But if not, Lloyd's, that cover holder from Lloyd's, they had a crazy COVID product. I want that, right? So you kind of want to mix and match these things together to reduce complexity, I believe. And that to me is something that hasn't really been understood. What that means, right? It means, hey guys, we need a new product in 3 months. If you don't, I'm going to go to our competitor, and that's going to be okay. On this one, we're going to go together.
Yeah.
But I'm actually not. I'm not quite sure if it. If, let's say, from a rational point of view, we always think that the best solution will win in the end. But if you just, let's say, take history, if you look back and you take, for instance, just stay with this example of Volkswagen and Allianz, or ADAC and Allianz, etc. Or just a recent example, Apple with Goldman, where they lost an enormous amount of money. And there are a lot of smart people working at Goldman. What you often see is, I think, a kind of psychological decision-making process where the big players find together. Not the best technical solution wins, but it's more like, let's say, if you would be the CEO of Booking and you want to do a global product, you're probably ending up with, let's say, Swiss Re iptiQ, or with Allianz or with AXA. But the chance that, let's say, this small startup with the better, let's say, solution will win, let's say, I think often is the exception. And then sometimes you have those exceptions and they scale then after product market fit. If you take our Mendel with the pet insurance, etc. But these are those exceptions, and in the end, then you have a lot of disturbance for a certain point of time, and then after this phase, then the big players find back together. So my bet would be that if Booking would have this excellent solution which you explained, then in the end this will be with AXA or one of those huge players, which is a pity in a way, but you see it over and over again.
Again, I think depending on how your pattern recognition is geared, I absolutely agree, right? And I think you should only jump as high as you need, good jumping horse, right? Only jumps as high as you need. All I'm saying is, in a hyper competitive environment, if you believe, there might be other things. So how do you then, as AXA, differentiate between alliances? Is it just the paycheck, or can it be something else? Can it be another technical solution? Can it be that you mirror some of the success factors, however Cover Genius managed to get Ryanair? And so I would say, my point is, you as the product, as a big insurer or small insurer, you cannot, every deal is unique in a way, because Booking might have a preference for a brand or not a brand. They might have a technical preference. They might really care about the product. They might not care about the product. They might already know exactly what they're doing and they just want to renegotiate margins. You just don't really know these things ex ante that well. And so what I would just encourage everyone to do, to invest in some level of humility and co-development, rather than saying, this is our plan and this is what we do and this is the only way we want to play, because as with everything, this market is in development and you'll get better at it as you go along. Personally, I think there are ample technology solutions, even teams. I would poach. If I was an insurer, I would take my pick of a cool competitor that I like, it's really good, and I say, listen, you want to come work with the big boys? There we go. I'll take your playbook. I'll double your paycheck. Your options aren't worth anything. At least ask your team about the liquidation preferences that were hidden in the last rounds, and asked about the valuation, and think how likely it is that you'll go above 100%, 200% until you get your fair share. But yeah, we'll get you a really cool thing. We'll work with people like Carla, who'll tell us how to ramp up go-to-marketing. There's things that have permeated, and I think it doesn't really matter who does it, whether it's InsurTech, an incumbent. I think as long as we'll reduce friction and deliver value, that's ultimately where it is. And if Goldman wanted to have a 3 billion, 4 billion learning journey, fair enough with Apple. That's okay. They can do that. But just kind of, and you see, Tom, and this is a topic that, and I think this is really good. I think it's a topic which there isn't one final answer, but I guess kind of conscious of time, is there a specific topic that you find that we haven't touched on that you think is often missed in this setting, that you would just address, and you don't even have to provide an answer, because we've honed in a lot on embedded insurance, but maybe there's a different topic that you would like to leave us with?
I think we tend to talk a lot about insurance products from the perspective of people that can afford insurance and are covered for almost everything, right? All of us probably have health insurance or some kind of form of income protection and those kind of things. But this project that I did in North Africa really exposed me to the opportunities that there are in the insurance space for more, I would say, for different kind of insurance products, where people can't afford a fully fledged health insurance, but they really would like a specific disease cover or a type of a micro insurance or income protection for if they fall ill or get COVID for 2 weeks and they're an Uber driver because they are the sole breadwinner and they just want to they need to put money on the table. So, I mean, I think there's a big opportunity in developing markets or emerging markets to design different kind of insurance products and also serve them in a way that the customers kind of need them rather. No, go ahead.
No, I think it's a very interesting point, and I think you know, kind of low income developing nations kind of come to mind, but mind you, we are in a high inflation recession environment in the affluent countries as well, with 10%, 20% inflation in some of these countries. I know Switzerland is not so bad, but I think, and Tom, you managed about, you know, holistic advice. Which insurer, and mind you, most insurers don't have all the policies, so they're not even cannibalizing their own portfolio, really goes, okay, we have 3 options here. We can go in and I need to understand your situation and I'll show you all the gaps about insurance. And if you have disposable income to do, I would absolutely recommend that with that priority. The second thing is, if you want to kind of keep it, we'll reshuffle it. We'll cancel some insurances, we'll improve some insurances, or we'll kind of keep it. But it's almost like not, oh, this is all the things you need to insure, rather than how much do you have to spend on insurance? And with that, I'll provide you a priority list and how that stacks up. And if you only have, X, then you should absolutely cancel all of your insurance policies and just put that, because that is the existential risk that you're facing. And that is not something that, for good reasons, you kind of don't go through your customers and try to churn them actively. But even in affluent, even in advisory-driven channels, you usually have, don't have all the product portfolio. So you could go and say, you keep your motor insurance with us, but I'll help you cancel all your policies on, that are not that relevant, that generates trust. And then you're there when they extend. So I think thinking about the disposable income of people and designing around that, to me, again, is something that if you're designing for a specific channel and they have that in mind, is something you'll learn. Because it might not be that your agents and brokers are actively going to do that because they'll fear being cannibalized. That's not what they're incentivized for. So maybe another channel through a bank or something that have nothing to lose might be a way. But I think that's absolutely something, same as a business. If someone goes, oh, these are all insurance, I was like, yeah, but, I need to do payroll in 2 months. So why don't you get in line? And, because that's not really relevant for me. So what I'm really interested is, how can I minimize my current insurance product to the absolute minimum because I only have X? And I think that's a very valid point. And that is not how insurers design products, unless it's provided by them to say, you have €5. Design me the most, and here's the data, design me the most relevant product that I can buy with €5. And that's what an outside-in product development will look like.
And I mean, I think the reason that where my eyes opened for why this is not being offered yet, they are desperate to enter those markets because there's high growth there right now, or high growth potential, not only in GDP, but, population growth. But they look at demographics and, disposable income even, and those things on paper, desktop research, and they want to they make decisions from a boardroom in Asia or in the UK and on how I'm going to enter into Africa. And they, make decisions on spreadsheets where if you just actually go in there and understand the markets, and to give you a simple example, they're like, okay, this is a mainly Islamic country, so we have to design Sharia compliant products. And you speak to the people on the ground, just one conversation with a taxi driver, and he tells you, we don't buy any financial products that are marked as Sharia compliant because people take advantage and they add extra cost to it. So I will not buy anything that's Sharia compliant. And that's actually how the people think. So some basic, just, talk to the people and understand what they want. Sometimes that's just missing.
Yeah, but I think the point you made about Africa is I think a very good point, because if you talk about embedded insurance or also unbanked or underbanked, etc., I mean, it's a no-brainer that if there hasn't been any market before, everything is open and you don't have to disrupt anybody because there is nobody to be disrupted. So if you would talk about also development of all those mobile phones, I mean, and that's in the end what Ping An and the other Chinese did, because there was nothing, you have an enormous opportunity. So I think if you talk about opportunities for embedded, doesn't matter, finance, insurance, whatsoever, then move to Africa or go to Africa, because there's nothing and they have a mobile phone and that's the access to the world, and you won't have, let's say, agents. Perhaps you also have agents, but there's a huge opportunity. But it's totally different from, let's say, those matured, over-satisfied markets where you think that you're just able with a nicer app to disrupt these huge companies like Allianz and Swiss Re and whatsoever, etc. I think this innovation, especially in these mature markets, there will go much faster and there will be much more cooperation between fintechs and these incumbents when everybody has understood that they have to work together, because otherwise Amazon will eat insurance, or Google will eat insurance, or Apple will eat insurance, etc. Because if you will work together with Apple or Amazon, then let's say they will do a certain period of time to work together with you, and then afterwards you're disrupted. So that's what I find still astonishing, that if we talk about competition, we don't see our blind spot.
Yeah.
Although Amazon nearly disrupted any kind of market, so why wouldn't they disrupt also insurance? Because they always say, okay, your margin is my market opportunity, and there's a huge margin, so there's a huge market opportunity.
Awesome. Unfortunately, I think we ran a little bit over time. I don't know.
We go all to Africa.
We go to Africa.
We'll go to Africa.
Carla, Tom, thank you so much for that vivid vivid discussion. And yeah, it was a real pleasure. And hope to, I wish you guys meet, in person to grab that coffee, and I wish you all well.
Thank you. I really enjoyed it as well. Maybe we can have a 2.0 discussion in 6 months to see how things have developed.
Absolutely. Carla, Tom, have a lovely day.
Thank you.
Take care.
Bye.
Bye.